Welcome to TradeTheNBI.com. This is John. This report is for the 11th of October. And well, that new fund money continues to push equities higher despite world situations, probably muted relative to what could be, but it's enough to create some of that short covering because, again, you got to go against the general viewpoint, which has been that, things should drop. But that's where they started that earlier before that opinion grew, and we retraced, and filled back to the algo level that we were expecting anyway. And then once we got back to it, it was just a matter of applying a little bit of pressure, and boom. And we saw this with the DOC building into the positive, as well as now shakeout almost reaching positive area. And that becomes significant because once the shakeout goes positive, it needs to maintain that continued arc. Otherwise, it will roll over. Potentially, that could happen right around the 50% mark at the 44.53 range. All this relatively normal. We still have MBI magenta leading. The yellow strong. MBI white catching up there. Pivot down at any point in there would give us a secondary type signal that we had back over here when the white takes the lead, and the expectation then is a move back towards the zero mark. So we'll keep an eye on that one. From an NQ standpoint, has been stronger from earlier, and certainly reflective in what we see from the readings from both the MBI, though the MBI white trailing the magenta pretty tight at this particular stage, so that could be more interesting. And the Nasdaq shakeout is already positive. We can see the DOC P2 pivot there, where much higher pivot, lower equal price creates a nice springboard, something we were pointing out, and it's very effective in general. Wait for my chart to catch up to us there. Well, let me go back to TLT. Treasury is not doing a whole lot in that situation at this particular stage. Yield's still quite excellent, and again, that's a drain on equities just from a money attraction standpoint, because you can still get a pretty strong yield. And if oil is able to remain in this more neutral zone, wait for the Wi-Fi to catch it up there. Still in the mid 80 level, not horrible, but excuse me, a little bit of a sneeze. From a euro standpoint, euro continues to climb back up, still holding right around that 106 range. Healthy enough to keep it from causing a real panic, but not exactly great. And it's only going to take one incident from an oil situation to, again, drive the euro further back down. So, not out of the woods, but certainly a little bit healthier than it had been. So, it's just a question of what's attractive about the eurozone relative to anything else. And oil certainly becomes a problem for the eurozone in general, particularly as you head into winter months. Gold, not unexpected. Actually, kind of a muted reaction at this particular stage, given what we've seen from inflation and that. But it's relatively consistent to what we've been seeing here with cryptocurrencies. Bitcoin unable to really do anything, just the lack of interest excitement in anything crypto at this particular stage, so that relative crypto winter still holding, but still up at 27K, so it's not exactly a nightmare situation. ETH suffering much more within this pressure and putting it down towards its lows. So a little more complicated trade. The easy era of the crypto movement sort of faded away quite some time back. From a 50K standpoint, so we had the move, retraced 50%. That created your ABC setup right there. And that second wave, that was the new fund money pushing through, created a series of positive extremes. They began right here at the 43.74. That would be a likely retrace target. And then the secondary one down at the 43.39. So that will just be a matter of any strong short signaling Not looking too horrible from an MBI. We got the white leading, but magenta's popped back above, so should be enough to sustain it. But when you get this deep move of steel going on down, um, it's just a matter of when it gets back up to that 13.5 that you've got the complete reset, and that allows for the next push. When we look at the intraday setup of it, was pretty clean. It started early on. There was some weakness in the pre-market, a lot of jitters, and then as soon as the broader pre-market opened, and then all the way through the open, it was just straight up. But you can see that created a host of positive extremes right about here. The 4382 level, we got a pretty decent retrace into that towards the later part of the day. Some nice intraday profit taking, so to speak. And then as we look at the pre-market, um, got close to filling that positive extreme right down here, the 87. So it was within a couple of points of it, and you can see as soon as that touched, sparked a lot of buying, and that's where we're currently at right now. Plus just under 8 at this particular stage, but ways to go before even regular U.S. pre-market opens. So that's the long and the short of it for now. I think everything's pretty consistent, and again, all eyes are going to be on the world stage, and any escalation, I think, is going to put definitely pressure on the market. So it's just something to be aware of because it's one of the few unknowns, and then it becomes an escalation question. So you can already see Iran's backed off from any kind of support on that. So it looks like people are trying to neutralize things because everyone recognizes how quickly this thing can spiral out of control. That wouldn't do anyone any good. As always, though, I will update you on the Skype chat. Trade well. We'll talk to you later.